Welcome to the Lane Gorman Trubit Expanding Your Horizons webinar series. It's important to stay up to date on legislative, industry, and business news. This series will help you do just that. Make sure to subscribe for more videos like this. LGT presents the first PPP Loans update for 2021. Learn what qualifications you need to apply for a secondary PPP loan, forgiveness of that loan, and the employee retention tax credit that could benefit your company. This was recorded live as a Zoom webinar on February 23rd, 2021, and all information was accurate and up to date at that time. There is a Q&A at the end, but if you have any questions, please feel free to email us at askus@lgt-cpa.com. Thank you and enjoy the video.
All right. Well, thanks everybody for attending our updated webinar on PPP. Let me give you a little bit of background about our firm, and I'll introduce the presenters. So we're Lane Gorman Trubit, a CPA firm based in Dallas. We've got about 120 employees, one office, but other folks that work remotely in different parts of the state and a couple outside the state. I'd like to thank you for joining us. Your folks here are all PPP specialists within our firm. As I mentioned, we're about a 120-person firm, been around since 1950, been dealing with PPP since it came out, and it won't go away yet, but good for everybody here. Hopefully many of you are getting some benefits out of PPP2 and the employee retention credit. But let me let you know who we all are. I'm Colin Kanalakis. I'm a partner with LGT, specialize in dealerships, and I'm just going to be here with an introduction, and I'll be answering a lot of questions in the chat. Your two panelists that are going to be doing the presentations are Patrick Riley. He's a partner with the firm, specializes also in dealerships. Denver Todd, senior manager with the firm, tax side, so he'll go into a little more of the technical areas of this presentation. So as we continue through, let's go past this intro slide. And disclosure, I'm not going to read this to you, but this is just a general disclosure where we say everything that we've told you on here, we're doing based upon more generalities. Your specifics of your situation might come up with different answers, and we're happy to jump on a call or email and walk you through things.
Perfect. Thank you, guys. So one of the things we're going to kind of go through as we set an agenda for today is, we're going to talk about PPP, the expenses that are now tax deductible. We'll talk about changes to that existing PPP loan round one, and also PPP round two, and some of the nuances that have come out regarding that. Finally, at the end, we're going to kind of touch base about the employee retention credit, and kind of as we go along here, kind of think how these all kind of interweave within each other, as they're all kind of based around payroll. So we want to make sure you can fully utilize, if available, that payroll for both the PPP forgiveness and for this employee retention credit. So Denver, you want to talk quickly about the timeline?
Yeah, sure. So good afternoon, everyone. I put the timeline on here because I think it's good to understand where we started and where we are at now. Because there's a lot that has changed and there's some things that have happened retroactively. So if we think back in March of 2020 is when the CARES Act was enacted. And this is the act that was for relief for businesses and individuals due to COVID. And within that act, you had the PPP program, which is the Paycheck Protection Program loans that people could apply, or businesses could apply for. And then the not talked about as much was the employee retention credit. And the reason for that was the employee retention credit, you could not claim it if the borrower had received a PPP loan and was going to get forgiveness on that loan. You're restricted from claiming the employee retention credit. Well, things have changed, and it's all due to this act that was passed in 2020. I'm sorry, December 27th of 2020, towards the end of the year. It's the Consolidation Appropriations Act, and this is where you get the business expenses are tax deductible now if they're funded by the PPP loans. You had the PPP loans round 2, which this means is um, it's not just for businesses that are trying to get a second loan. This is also for businesses that have never applied for a PPP loan during the first round. They can apply, or a business that did get a loan in the second round can apply for a second draw, but there are some restrictions that deal with there's a different head count that you have to meet, and also you have to show a decline in gross receipts. We'll talk about both of those. And then, as I was mentioning just a few moments ago about this employee retention credit, it's been modified, and the modifications are mainly where it's been extended. It was supposed to expire at the end of 2020, but it's been extended for the first 2 quarters of 2021. And some of the rules have changed for the 2021 year, but most importantly, and this can be huge for some businesses, it's retroactive back to March for businesses that did receive a PPP loan can now take the employee retention credit as well if they qualify. And we've seen some big numbers with this employee retention credit. And we'll speak more about that towards the end of the presentation. So it's worth to stay tuned for that to see if you might qualify. And then, sorry, I'm trying to get to the next slide. I'll talk about the PPP loan expenses and then hand it off to Patrick. So just a little bit of background real quick. Back in March, where we talked about the CARES Act that was enacted because of COVID and everything, it said that the forgiveness of the PPP loan is tax exempt, but it didn't really talk about the expenses if they were going to be if they were going to be deductible or not. And in the middle of 2020, the IRS came out with the position that said the PPP expenses that were funded by the PPP loan cannot be deducted for tax purposes. And what's happened now with this bill that was passed at the end of the year is Congress has gone in and basically overruled the IRS by putting a new law into place that specifically states that the expenses generated from the PPP loan are now deductible. And just a little bit more about this real quick, and then we'll move on. The mechanics of how this works is when the loan is forgiven, it's going to be tax exempt income. And if you're a flow through entity, it's going to increase your basis. And then when the expenses are going to be fully deductible now and they're going to decrease your basis, but there's a timing issue that can possibly affect your businesses if they don't have adequate basis, because the loan forgiveness is not considered tax exempt income until it's forgiven. So if you have not had your loan forgiven in 2020 and your decision, you receive it, your PPP forgiveness decision in 2021, it's going to be on your financials for 2020 as a loan payable, and then it would be forgiven in 2021. So you have a timing where you're deducting the expenses in 2020, but you haven't recognized the tax exempt income yet in 2021. So this can get pretty complex, and I'm not going to go into it, but I just want to make note of there could be possible basis issues because of the timing, where your distributions from a business could be taxable if they're in excess of basis. And then also you could have suspended losses that are not deductible because you don't have basis and they just be carried forward. But just something to consider. If you think you might be in this position or you're curious about this position, definitely reach out to your CPA or whoever prepares your tax return. And with that, I will give it back to Patrick.
All right, thank you, Denver. So with the new guidance that came out, that they added a number of different things to both the PPP one. We'll call PPP one the first round, and that part of that was expanding the definition of payroll cost. That included a group that lets you include a group of insurance payments made on group life, disability, vision, and dental insurance. All that can now be included in your payroll cost for forgiveness. They also added 4 new eligible non-payroll expenses. Before we had, rent, interest on mortgage, interest, telephone, internet, transportation. Now they've added 4 more non-payroll expenses that kind of help expand what you can use as part of your forgiveness, and we'll go over that in a little bit. One of the other more interesting clarifications that was out there before, that we all kind of thought, but we weren't sure. Now, originally, the loan forgiveness covered period was an 8-week period. They expanded that to 24. Then they talked about, well, what if we don't need the full 24 to get our full forgiveness? Now the clarification came out that you can choose your forgiveness covered period from any point between 8 weeks and 24 weeks. So if you want to use 10 weeks or 15 weeks to get your full forgiveness, you can do that on your forgiveness application. They've also increased the simplified forgiveness process. Before it was $50,000. Now they've increased that, where if your PPP loan was $150,000 or less, there's a more simplified method you can use that is a lot more certification based than actually going through the calculations of and providing the backup for the forgiveness portion. You still need to retain that information in case there is ever an audit by the SBA. We'll talk a little bit, I think, about the thought process was that if your loan is over $2 million, you're subject to an SBA audit on your forgiveness. That does not mean that any number under that is not subject to audit. If they find irregularities or they decide to, I don't know, do a random sample of some of these forgiveness applications, they may be subject to audit as well. So you need to be retaining that information and backup if they need it. But just the fact that it's a simplified process for those under $150,000 is a big step for a number of these loans. The other item that they included on there was the economic injury disaster loan advance, or the EIDL. That was a $10,000 advance if you applied for both PPP and the EIDL during that first time. Originally, when you applied for forgiveness, say your PPP loan was, $500,000, and you had a $10,000 EIDL advance, you could not get the full $500,000. They subtracted that EIDL advance. That is no longer the case. So now you could have that EIDL of the $10,000 advance, and you could still get your full forgiveness on your PPP loan. There we go. One of the other items, that came up with the PPP, a lot of people sat there at the beginning of this, when they found out that $2 million was the threshold of an audit, or they wanted to remain under that threshold, or maybe they misapplied at the first time. If you didn't take, if in your original loan you didn't take the full 100% the maximum of what you could apply for at the time. You may reapply for that maximum amount, and the difference between that and get the difference between what you received before and that maximum amount. So that's something to consider. You still have uh, you know, certifications that you need to make that show that you're needing the loan. There's also the over $2 million necessity questionnaire that has been floated out there by the SBA and the bank. Technically, that necessity loan is for informational purposes, according to them, but it's hard to. We recommend that you make sure that you have the backup, that there was uncertainties at the time that you made these loans, that you asked for these loans, and that's why you requested them. The EIDL, like we said before, that $10,000 advance. If you've already applied for your forgiveness and you've taken that amount off of your forgiveness application, you can, the guidance says that the SBA should be reconciling that with your bank to get you that full forgiveness amount. But that's something you probably want to follow up with your lender. Make sure that they're aware that your original forgiveness amount was the EIDL advance.
Yeah, and just to add to that real quick, the advance might have not been 10,000 because it was based on how many employees that you had at the time you applied for the EIDL loan. So if you only had 5 employees, it'd be 5 times 1,000, so you'd get an advance of 5,000. So just be aware of that. And then secondly, the EIDL advance is tax exempt. So when you provide the information to your tax preparer for your 2020 tax return, make sure you tell them if you got that EIDL advance and how much it was, because they need to be able to treat that as tax exempt income. If they don't know that, they could pick it up as just regular income and you could be taxed on that. So something just to think about.
Yes, very good point. Thank you. So now the additional non-payroll expenses that they've added in this, these are expenses that, as we go for forgiveness, you can get up to 60% payroll and 40% non-payroll costs. And those traditional non-payroll costs, like we said before, were your internet, your TV, your phone, mortgage interest, rent to non-related parties. Well, now they've added some more eligible non-payroll expenses. The first one is covered operations cost. These are business software, cloud computing operations. One of the items I pulled said, payments for business software or cloud computing services that facilitates business operations, product or service delivery, the processing, payment, or tracking of payroll expenses, HR, billing functions, or account or tracking of supplies, inventory, records, and expenses. There's a lot in there. If you dive down, I think you can look at, what software are you using? If you're really looking to maximize your non-payroll expenses here, you could look at, what are you using for your inventory management? Are you outsourcing your HR to like an ADP or something like that? Those fees can now be included in here. Your accounting system. If you're paying a software provider for your accounting system, those are some of the major costs I think that can now be considered in there. The second one was covered property damage. This is due to public disturbances, like vandalism or looting or items that, we saw a number of those during the summertime. Any of that was not covered by insurance, you may be able to take that as an expense as well. The covered supplies cost. These are expenditures to a supplier of goods that are essential to the operations of the entity at the time at which the expenditure was made, and is made pursuant to a contract or order in effect of any time before the covered period with respect to perishable goods that could be in effect of during the covered period. Those are kind of your supply operations. Um, you know, I don't think there's going to be as many costs in there as maybe the covered operating costs, but if there is a case where you're having to pay the supplier costs for your goods that you're selling, those could be considered in there. The fourth one, which I think is also a good one that more people probably have, are covered worker protection costs, operating or capital expenditures to adapt businesses to comply with any health rules. And I think the next slide is going to go into a little bit more of that. If you want to switch to the next slide, Denver. Okay. So covered worker protection costs. These are anything that have been purchased after March 1st to comply with either HHS, CDC, OSHA, or state and local government requirements. These are related to standards of sanitation, social distancing, or other workers or customer safety requirements. These include, but are not limited to, if you've put together a drive-through window and had to retrofit something so there was less contact with the customers. If you did glass or plexiglass in your showrooms, if you did any indoor or outdoor ventilation or filtration systems, like I said, any physical barriers, any expansion in indoor or outdoor spaces, if you've set up, maybe you have where you set up an outside kiosk for customers to come in where they don't have to come into your showroom. Any on-site or off-site health screening capability. This includes, testing of your employees, or obviously any N95 respirators, masks, nitrate gloves, surgical equipment, items like that. Any residential real property or intangible property don't qualify during for these costs.
Hey, Patrick, to make one comment on this,
Sure.
additional. So some of y'all might be looking at this and thinking, it's nice that they have these additional non-payroll expenses, but I have enough in, let's say, wages or whatnot that I can get the whole loan forgiven. I want to point out these could be potentially important because if you are a business that is eligible for the employer retention credit, as you'll see towards the end of the presentation, it's more beneficial for you to maximize out your non-payroll expenses on the forgiveness application now that we know the new law that just changed right before year end, because that means if there's less wages tied to the PPP loan being forgiven, then that means more wages that can qualify for the employer retention credit if your business qualifies. So just
Absolutely.
something to consider.
Yeah, one of the things is you can't double dip with the payroll. You have to use it for one or the other. And that's kind of an analysis you have to make, or something we make. But back to that point on the costs, you can only use it for one or the other. You're going to get more bang for your buck getting full forgiveness on the PPP loan because it's dollar for dollar. But if you do qualify for that employee retention credit, and you do have the ability to use these non-payroll costs, you can cut down on the amount of payroll that you need for your full forgiveness, either by weeks or what have you, and be able to use that not that payroll that you're not using for your PPP forgiveness towards these employee retention credits if you qualify for them. So round two, we're gonna push that over to Denver. Go ahead, Denver.
Sure. So as I mentioned at the beginning, when I was going over the timeline, it's important to remember round two, a business that has never received a PPP loan can apply for the first time, or a business that did receive a PPP loan can apply for a second draw. It's just this time there's going to be limitations on which of the businesses that got it the first time can qualify for the second draw. But so this round two, it's going to be available through March 31st, 2020, meaning you can apply up to that date. Entities applying for the first time, these would be entities that didn't get a PPP loan the first time. They'd use the original PPP rules, meaning like when you did the application, it'd be based on 500 employee cap, and then the minimum amount of the loan would still be the 10 million. There's increased eligibility, meaning there's more entities that can qualify as a PPP borrower. And these entities would be first-time borrowers because they couldn't apply in the first round. But not-for-profit organizations, there are some limitations if you have political activities or you're receiving political or I think it's lobbying actually is what the term used, but definitely if you do have lobbying, look into that, and then you'd want to double check to make sure your not-for-profit qualifies. Then some of the others, news organizations, etc. These are entities that can now apply for the first time. So they came out with this round two, what entities are ineligible to apply if the business permanently closed, the business was not in operation on February 15th, entities that are receiving the shuttered venue operator grants. These would be such as like museums, zoos. If they're receiving those grants, they cannot also apply for the PPP loan. There's if it's a publicly traded business, hedge funds, private equity, any lobbying organizations. This is just a partial list, and there's some other ones as well. Okay, so as I mentioned, this PPP round two, you can apply for the first time, or you can apply for a second draw if you got a first draw back when round one happened. So who can apply for the second draw? If the business, you have to meet this criteria. This time it's going to be 300 or fewer employees, and that's down from 500. You have to show at least a 25% decline in gross receipts during any 2020 quarter compared to the same quarter in 2019. So for example, if your gross receipts in the second quarter of 2020 are 25% or more compared to 2019 second quarter, then you would pass this test. You only need one quarter in 2020. You don't need to pass it for all quarters, just one quarter. If you weren't in business during 2019 or you opened midway through 2019, there's additional rules when you're doing the comparison that you'd have to follow, because obviously you can't follow this exact rule if you don't have some of the quarters that a business was open for the entire time in 19. So that's just something you need to look further into that and reach out if you have questions. We can provide more information on that. And then as mentioned, you're measuring your quarterly gross receipts. If you don't have financial information on a quarterly basis, then you can do the full year. So you compare the 2020 year to 2019. Okay, so if you meet those two, you're pretty much golden. But the thing is on the third thing, you have to use all the funds from the first draw for on eligible expenses. on or before the expected day of the second draw. And there's actually, I've read that the SBA is not going to release the second draw until they have basically you've signed in writing that you've used all the funds for the first draw. The lender has to come to you and get you to certify that you've used all the funds. And then lastly, the same affiliation rules apply as the first draw. So just something to keep in mind, because that could affect how many employees you have. Maybe you only think of one business when you're applying, but you might have to include employees from affiliate if they're commonly owned. And as you'll see in a minute, the gross receipts test that we're doing right here, if you have affiliates, you'd have to combine their gross receipts as well. Okay, for the affiliation rules, just a refresher, right here about the gross receipts, you'd have to combine them if you have other affiliates. And what is the definition of gross receipts for this? So gross receipts are defined as all revenue in whatever form received or accrued in accordance with the entity's accounting method. So that'd be, are you cash or accrual or some sort of hybrid method? And here are some of the items that would be considered gross receipts. And then not-for-profit, as you can see down there as well, it describes the different types of items that would qualify. I'm not going to go through this because what I would recommend is on the bottom of this page, there's a hyperlink to the SBA guidance for gross receipts definition. And within that guidance, I think it's question 5, they actually tell you exactly where to go on the tax return to calculate your gross receipts, what to add up. And you can just go there and then look at your tax return to compare. And then obviously the tax returns on a yearly basis, and you probably want to be looking on the quarterly. So you figure out how your gross receipts were being reported on your tax return, and then figure out how it was mapped into the return, because sometimes CPAs will group multiple accounts together. Then you go figure out for quarterly how those would have been mapped on your tax return, and then you can figure out what your gross receipts are. But usually it's just going to be your sales, interest, dividends, the items that are listed here. Okay, there are some items.
Deborah, I think that, sorry, also on that hyperlink, they've got some good material for if you're a nonprofit dealing with like grants and how to treat those grants on if you treat those as gross receipts or not, and the type of grants that you receive. So there's some good stuff there.
For sure. Also within that guidance, but we'll list it here, there are some items that are not included in gross receipts. And the main one here is if you have net capital gains or losses, that would be excluded. And then a big one is if you have forgiveness from your PPP loan and you got the decision in 2020, you'd want to exclude that in the quarter that you, or it would be excluded on the yearly basis, and then you'd also exclude it in the quarter that you recognize it if you did recognize it in one of the quarters. And then the EIDL advance would be excluded as well. Remember that EIDL advance is tax exempt income, so that's probably the theory behind why it's being excluded. Okay, so we talked about if you're going to get the second draw, some of the new requirements that your borrower has to meet to be eligible. And then if you are eligible, you have to figure out how much your loan amount is that you're going to get on the second draw. And the max loan amount is $2 million for the second draw, and it's going to be essentially the same as the first draw. It's going to be 2.5 times your average monthly payroll. You can use 2019, 2020, or 1 year immediately before the application. What that means is if you're applying right now in February, 1 year immediately before that would be February 2019 through January 2021. I guess it could be worth it to check that. If there's more wages paid during that time, it's more favorable than to use others. So you want to figure out which one is going to give you the most wages, because then that means you're going to get the biggest amount of a loan. And then seasonal, there's different rules on how to calculate that, and it defines what seasonal is down there on the slide. Okay, so with that, as part of this, as everyone knows, restaurants and hotels have been hurting a lot because of COVID. What they added in the bill that was passed at the end of 2020 is any entity that falls under the NAICS code starting with 7.2, which is going to be restaurants, hotels, and there could be others as well. You're going to get to use 3.5 average monthly payroll instead of 2.5, and the 300 employee test is by location, not in total. And this right here is the second draw borrower application form. And this actually tripped me up the first time. There's a different application form if you're applying for the first time that you'd want to use. And then secondly, there's a third application form if I believe if you have under 150,000 is the loan amount you're requesting. It's just a one pager. It's a lot simpler to fill out. So there's 3 application forms. But as you can see right here, if you're applying for the second draw, down there, or like the purpose of the loan, the new non payroll costs that you would select if you're going to take the loan out for those reasons. And then as you can see, the reduction in gross receipt, you have to state those amounts there. And I guess it does say applicants for loans of 150,000 or less may leave this blank, but they don't have to provide that when applying for the loan, but when they seek forgiveness, you would have to show that you did have the decline to be able to get it, to be able to get the loan forgiven. So as I mentioned at the beginning of the presentation, there's this employee retention credit that no one really cared about because everyone was getting PPP loans. But now that this employee retention credit's been modified where businesses or borrowers that receive the PPP loan and they're going to get forgiveness can now get the employee retention credit. This comes back into the picture, and it's important to know how this works because some of these credits are huge. And firstly, because this is all intertwined, we'll talk about these 2 payroll credits. There is this paid sick and family leave credit under the Families First Corona Response Act. This is if you had an employee that was that received COVID and they had to stay at home, or you had an employee that was dealing with a family member that was sick, or maybe they had children and the school was closed and they couldn't be at work because they had to take care of their kids. There's numerous reasons to qualify under this. You would be able to take a payroll credit if you paid those type of wages, and you take that credit on the, your Form 941 each quarter. This has been extended to March 31st, 2021, so you can still continue to take those credits for the first quarter of 2021. Then also the employee retention credit, it's a payroll credit as well, and this has been extended to July 1st, 2021. It was supposed to end at the end of 2020. So that I keep mentioning this bill that was passed at the end of 2020 where they made the PPP expenses deductible, the Appropriations Act. Well, what it did is that what they really did is they modified the employee retention credit for the first 2 quarters in 2021 to make it more favorable to taxpayers to be able to take it. They didn't really change much about how the employee retention credit was calculated before 2021, but they did make it retroactive where businesses that did receive the PPP loan can now take the credit. So that's the whole reason we're going to talk about this, because it could help a lot of people or a lot of businesses. So just to show you right here, this is a Form 941. It's on the second page. If you're not familiar with 941, it's a quarterly filing requirement. If you're over a certain amount of payroll deposits that you have to make. and most businesses will be filing this, and it's usually due the end of the month after the quarter's over. On the second page of this form, there's this refundable portion, and this is where you would take that qualified sick and family leave. That's where the COVID pay credit's taken. And then the refundable portion for the employee retention credit is taken on here as well. And we'll talk more in a little bit about if you think you have a credit, but you didn't claim it on your quarterly 941, what do you do? So we'll talk about that. All right, let's talk about the employee retention credit. First, it's a refundable payroll tax credit, as we mentioned. And then to repeat again and reiterate, if the business received the PPP loan and it was, you were going to get forgiveness under the old law, the credit was not available. Well, now the new law, this Appropriations Act of 2021 retroactively removed the restriction between the PPP loan and the ERC. So businesses now may take advantage of both. But the key thing is you can't take the credit on the same wages that are forgiven for the PPP loan. So there's going to be some math involved in this, figuring out everything. Okay, so who can take it? Employee retention credit, just the basics. Employer of any size, including tax-exempt organizations engaged in a trade or business, can take it basically no matter the size. And there are some exceptions if you, for not-for-profits. I've mentioned them there. So how is the credit? Are there any limitations to being able to take the credit? Yes, there are. This is where it's is going to exclude some businesses. To be able to claim the credit, either of two things had to happen. Your business had to been shut down by a government order, or your business had to experience a large drop in year-over-year gross receipts. So the key here is you've had to experience one of those. I'll come back and define both of those in a second, but let's keep going on how much of a credit you can take, and then you'll see how lucrative this is for being able to take these credits, because we've seen some big numbers. So the time period credit is available. So it's qualified wages paid after March 12th, 2020 and before July 1st, 2021. This is where it can get confusing. Remember, there's think of 2020 and 2021 separately. There's separate rules for 2020 and separate rules for 2021. Basically, they increased some of the rules to make it more favorable for taxpayers and businesses in 2021, so businesses could get more of a credit. So, okay, let's go into it. For 2020, this is how it works. This is the percentage of wages. So 50% of the wages paid to an employee up to a maximum of $10,000 per employee per year. So the wages includes compensation plus healthcare costs. So what that means is you'd figure out how much you paid that employee, excluding the COVID pay, and if they had wages that were included in the PPP loan that are forgiven for 2020, you'd figure out after you exclude those two, how much of wages have you paid this employee? And you can count up to 10,000 per employee, and you get to take a credit for 50% of that. So you get a credit of $5,000 for that employee. And if you look at the maximum credit amount down here, let's do 2020, and then we'll go back and do the repeat for 2021. So if you look at the maximum credit amount for 2020, it says the annual cap of 5,000 per employee per year. So where you get that is you get 10,000 is the maximum that we talked about up on the percentage of wages. That's the maximum of wages you can count towards the credit per employee. And then you multiply it by the max 50%. And that's where you get the 5,000. So for 2020, you're limited. Each employee, you can only count up to 10,000 in wages, and the maximum credit you can take per employee is 5,000. And I keep repeating this because now look at 2021, how different it is. they increase the percentage from 50 to 70% of the wages up to the max. But look, it's 10,000 per quarter, not 10,000 per year. So, and this is only for 2021, and there's only 2 quarters you can claim it. So if you go down to the maximum credit amount, the maximum credit you can take per employee is 7,000 per employee per quarter. So that would be 10,000 in wages in 1 quarter times 70% is 7,000. And then if you paid that same employee at least 10,000 the second quarter, you can get a credit up to 14,000 per employee. If you think if you had 10 employees and let's say you didn't get the PPP loan and you didn't pay COVID wages and you paid each employee $10,000 in each of the first 2 quarters, you would be able to get a credit of, if you had 10 employees, it'd be 140,000, or wait, did I do my math right? Sorry, yeah. It'd be 70,000 for the first quarter, and then the second quarter, your credit would be another 70,000, so you'd have 140,000 credit for those first 2 quarters. So this credit can really add up and get pretty lucrative. But as I mentioned, I'll go back to the previous slide. You can only take the credit if you had either of these 2 occur. You had to have a shutdown by government order or experience a large drop in year-over-year gross receipts. So let's define what each one is. Shutdown by government order. Remember, you have to have either of these to be able to take the credit. The business operations fully or partially were suspended due to government order limiting commerce, travel, or group meetings due to COVID-19. If this did occur to your business, you only get to count wages paid during the part of the quarter the business was shut down towards the credit. So that's one way you can take the credit. The second way, and I feel like could be a lot of businesses will be able to take advantage of this. If your business experienced a large drop in year-over-year gross receipts, you could be able to take the credit as well. And what is a large drop year-over-year? So what they've defined it is you have to have a decline in gross receipts when you compare a quarter in 2020 to the same quarter in 2019, and it has to be more than 50% decline for 2020. So for example, you're in the second quarter of 2020, you look at your gross receipts and you compare it back to your 2019 second quarter. If your gross receipts declined by more than 50%, then you would meet this test. And for 2021, that decline has been changed from 50% to 20%. So for the first 2 quarters in 2021, if you compare 2021 quarter 1 to 2019 quarter 1, and there's a more than 20% decline, you'll qualify for the credit in that quarter. What is kind of interesting about this though is if you read this part right here where it says, so let's say you have the business in quarter 2 of 2020, you do have that decline of more than 50% gross receipts compared back to 2019. What's interesting is once this happens, every quarter is an eligible quarter until the end of the quarter in which the business's receipts have returned to at least 80% of what they were in the same quarter in 2019. That is pretty confusing, but what that means is, let's say 2020 quarter 2, you had a more than 50% decline in gross receipts. Then let's say in 2020 quarter 3, you're back up to normal in gross receipts, meaning when you compare your 2020 quarter 3 to your 2019 quarter 3, they're even, you're flat. Well, what that means is based on how the rules are written, you would get to count your 2020 second quarter and your 2020 third quarter as eligible quarters. So the wages paid within those 2 quarters would count towards this employee retention credit. This stuff can get really confusing, so bear with me. All right, so if you had a business that was not in existence in 2019, there's different ways that you can do the comparison to see if you have the decline, so just keep that in mind. And then for the 2 quarters in 2021, when you're testing to see if you have the decline, you actually have the option to test 2 different scenarios, and if either one meet the test of more than a 20% decline, then you can take the credit. So just like you can right now see, you can go and check to see if you have met the credit for quarter 1, even with it not even being over. Because look at for 2020 first quarter, the business can, it says the first one, but if you ignore the first one, go to the second one, compare 2020 fourth quarter to 2019 fourth quarter. So if you take your 2020 fourth quarter and compare it to the 2019 fourth quarter, and you've had a more than 20% decline in gross receipts, you can go and file a advance credit request and get that employer retention credit refunded now of what you've calculated. So you can actually get the money now versus wait until the end of the 2020 first quarter. Okay, so this all sounds good if you have the gross receipts test, but it gets a little bit more complicated, and this is why we're going over this. So what we have to mention first is you need to drill this into your head what a full-time equivalent is for this employee retention credit. It's employees who work 30 hours per week or 130 hours in a month. This differs from the definition of a FTE for PPP loans. And you're probably wondering, why is he telling me full-time equivalents? Like, why do I care about that? Well, unfortunately, it's possible not all wages for employees can count towards the credit, because some attorney that was writing this law for Congress came up with these rules, but let's go with it. It says, do wages for all employees count towards the credit? It depends. We need to know how many average full-time equivalents you had for 2019. If the business had 100 or less average monthly full-time equivalents during 2019, all employees count, meaning if you have an eligible quarter where you had that decline in gross receipts or your business was suspended, for that quarter, you get to count all wages that were paid to those employees up to the maximum of $10,000 after you've excluded the COVID pay and the PPP loan amounts that are going to be forgiven. You get to count all that towards calculating the credit. If the business, however, this is important right here. If the business had more than 100 average monthly full-time equivalents during 2019, only wages paid to employee during the eligible quarter to not provide services are eligible for the credit. Well, what does that mean? You're basically paying an employee not to come to work. So if you have a business that in 2019, you had 150 full-time equivalents when you went back and calculated it, and you do have the gross receipts decline or your business was shut down, what happens is you'd only be able to count wages in that eligible quarter paid to employees that did not provide services. So you're probably thinking, like, how does this even help me? What's the point of this then? If I'm over that, it doesn't seem like it's worth it to go through the exercise. We will mention that employees staying at home and not being paid, it's likely that they're still on your health insurance plan. And if I go back to up a slide, excuse me, wages include healthcare costs. So if you go here, you could be paying employees healthcare costs, and those would qualify the credit even if they're staying home and you're not paying them. And then also, if you're paying employees 40 hours, but they're only really working 15 hours, for example, though you could count the difference. And then importantly for 2021, the threshold is increased to 500. So you substitute the 500 for 100. So a lot more employers would be able to, or businesses would be able to count all employees' wages and not have to worry about the second part about not providing the service. Um, Again, something else to mention, you will have to aggregate related entities when determining if you had a significant decline in gross receipts or whether the employer had more than 100 FTEs, or for 2021, it's 500. And here's the information that talks about related entities, and then you can click the link at the bottom that gives more information. I think this might be, yeah, there's, real quick, just about a minute or two left. Okay, so the PPP, the COVID pay, and the employer retention credit, what does this all mean? You can't claim the same, or the same wages can't be claimed for all. They can only be claimed for one. It's important if you are a business that you are qualifying for the employer retention credit to maximize your non-payroll costs on an unfiled PPP forgiveness application, or if you're getting a second draw, to maximize non-payroll costs if you're going to qualify, because you want to get non-payroll costs forgiven, so there's less payroll costs being forgiven, which means more payroll costs that will qualify for the employer retention credit. One of the biggest outstanding questions relates to PPP forgiveness application, because a lot of borrowers claim wages in excess of the PPP loan amount on the PPP forgiveness application before this new law was enacted at the end of 2020. And so, for example, if you did a forgiveness application and you chose the 24-week period and your loan amount was $1 million, but over the 24-week period you had like 1.8 million in wages, can that 800,000 that's in excess of your loan amount be claimed towards employer retention credit? We expect further guidance on this, but it would seem that you would be able to, just based on logically, because 1.8 wasn't forgiven, only $1 million was forgiven. But look for more guidance on that. And then lastly, I did see a question on this or two. How do you claim it? So if you are eligible for the credit in 2020, when you go back to look at the quarters, you'd file amended fourth quarter 941 for 2020, and you can claim the credit for all the second, third, and fourth quarter, all in the fourth quarter amended. And then for 2021, the employer retention credit, the three options are: you can choose not to make the federal tax deposit for the ERC amount, or if you've made the federal tax deposit for the ERC amount, you can file the Form 7200 to claim the advance credit, which means you get the money now, or you can just pay your payroll tax deposits like normal and then put the ERC on your 941 when you file and then get the refund then. And if you think you qualify for the ERC, make sure to notify your payroll provider, because usually they file it the day after the quarter closes, and you don't have to go back and amend to 941. You would want to have time to calculate the credit and then file the original with the credit on there as opposed to amending. And that's it.
All right. Thank you, Denver. Sorry to rush you at the end there. The only other question I kind of saw that came up, and we've gotten this from a number of clients, there was on the PPP loan forgiveness, a couple of the banks have kind of closed their portal as they're trying to figure out. You'll get a message that they're updating their system for the new guidance, yada, yada, yada. I think you just have to bear with these banks. They're a little bit slow on creating this brand new loan process, getting it approved. Just make sure you're using the most recent forms. A lot of them have expiration dates or effective dates on the top of them. And then even if you can't file for your forgiveness yet, that doesn't preclude you from applying for PPP2 if you qualify. So there are some workarounds here. I think I'd just like to also mention, you know, LGT is happy to be a resource for you. Any of the people here are well familiar with our plan, with the PPP and the ERC. We're willing to help. We've helped numerous clients with their PPP forgiveness applications, and we're helping more and more clients with their ERC credits and all those that are associated with that. So if you need any help, please reach out to one of us. We're more than we're more than willing to help you out, and we really appreciate your time today. So thank you very much. Have a great day.
Thank you for joining us. Please make sure to follow our events page for more information. The link is in the description below, along with other important links, including our social media. If you would like to see more of the Lane Gorman Trubet Expanding Your Horizons webinar series, subscribe below and hit the bell icon for notifications.